In this video lesson, I will try to answer what are Forex trading mistakes that you should stop doing in order to succeed. On the left side, I have written an article on the Get to Know Trading website where I have put more details about this topic, and I will cover in today's video lesson. Here are the smallest topics that I will cover. On the right side, I have gold against US dollar on a 1 minute time frame to show you trading examples so you can much more understand what I'm talking when I'm talking about these topics. Here, 1 minute time frame on the chart represents one candle is 1 minute. When 1 minute closes, the second candle opens and it continues to move on. Then you have more time frames here. Well, for example, if I put 1 hour, which is H1, that means this candle represents 1 hour. Now, Forex trading mistakes, there are lots of them, but I have put them here that are most crucial and most important that you should also stop doing in order to succeed, because if you lower these mistakes, this will lead you to be more successful, more profitable, and to reduce the loss. First one, no education. And that is very important because you need to understand the tool that you are using. For example, in this case, it is trading platform. I am using MetaTrader 4. You have MetaTrader 5. Then you have other trading platform that your broker offers you. But these are the most used ones. Then you need to understand what is trading, what means on the Forex, what means these candles, what means these tools inside the trading platform, and how to use them. This is everything under the education. You need to understand the basics. For example, if I click this new order and here you have volume, you need to understand what the volume means, what is a lot size. But for a quicker education, I will just tell you that this lot size, for example, if I put this one here, and I click sell by the market, I have defined when the price change, and that means here on the last digit, which will be changed by 1 pip, how much money that will be. So for example, you can see how the price change, and also you can see here how the amount of money I am currently in profit or loss here in the last column where the profit is located. So this is the lot size. Then you need to understand what is the margin, and that means here what is the free margin, also visible here. What is a leverage when you open a trading account, which is close connected also with the lot size. And those are the most important things that you need to learn when start trading. So those are the Forex basics. If you would like to learn more about these, you can also check the playlist on my YouTube channel where I have explained all of these basic terms. Then there is a no trading system, no trading strategy. That means you need to know when to enter the market. For example, I will close this order and I want to open a new order. When to open a new order? Will I open right now? Will I open, for example, if the price goes up or if the price goes down? Because in trading and the Forex, you need to find, will the price go up or will the price goes down? So you have 50% a chance to predict where the price could go. But if you are using tools and you have a trading plan, that means a trading system with certain steps and rules, you can increase that 50% chance in your favor. So it is not 50%, maybe it is 70% of success and 30% of loss, which is great in trading. Now, this is a trading system that will tell you when to enter and when to exit. Second one is a risk management. A risk management tells you how much money per trade you should lose and how much money you should earn. That means when you open this window and when you define the volume with the stop loss and the take profit, you can also define what will be the entry level. The stop loss and the take profit are risk management. That means a stop loss, for example, let's open a sell by order. That means I am expecting that the price will go down. Now, if the price goes against me, how much money will I allow this trade to lose? Will that be here or will that be even higher? Now, for that, you need to put a stop loss, and I will change that, modify order, 50 points. Let's check this one, and I will drag this one here. I will put take profit, down here. Now, I have defined that I would like to lose, if the price goes against me, $386. So compared to my account balance, which is $8,000, this could be around, let's say that, let's round this to 8,000. Okay, let's round this to $400, which will be 5%. So I'm risking 5% of this on this trade, where I could make 440, and also very close to 5%. So the risk to reward ratio is 1 against 1. That means for the same amount of loss, I am trying to make the same amount, which is not very good. Usually you should have at least 1 against 2 risk to reward ratio. But the stop loss here, which is close to 5%, should not be that high. You should always aim to 1%, which in this case should be around $80. Now you can see it is 120, so here it is very close to 80. So this is the amount you should pay attention and to watch, not to lose much more than this on this trade. So how you will define this risk depends on you, but it is very important to have a risk management included. If you are losing too much on this trade, you will wipe this account, which is $8,000, very quickly. So imagine if you have 5 trades, very bad, which means with losses in a row with 5%. That means 5 trades multiplied with 5%, it is 25% of loss on your trading account. So instead of having $8,000, you would lose 25%, which will be equal to $6,000. So you will lose $2,000 just with 5 trades, which is very bad. But compared to if you have 1% of loss, which is $80, you will lose $400, which will be 4% of your trading account if you have 5 trades in a row with a loss. So this is the risk management. You need to protect your trading account on each trade and to aim to have a risk reward ratio 1 against 2, or even better 1 against 3. So if you have 3 trades with a loss, you can come back with 1 or 2 trades with a profit. So this is something that you should pay attention to have on each trade. Then you have here wrong broker, check the broker. What that means? Well, there are bad brokers who are scammers that can take your complete invested money on your trading account, so pay attention to that. Some of them will allow you to invest, to trade, but when you make the profits, they will not allow you to withdraw your money to your bank account. So this is something also possible, so pay attention to use only a regulated broker and read more about reviews on the forums, what the traders are saying. In today's world, it is very easy to find who are the scammers and try to find the regulated broker from the regulator body in the country you are trading. No stop loss order. That means there is no stop loss, and that means if I open the trade with this without having the stop loss, and that means if I completely delete this one, there will be no stop loss, which is very bad. What that means, the price can go against you, against you, against you, and completely go up, and then you will lose all the money you have on your trading account. This is a very bad situation. So this is one of the mistakes traders always do, because they do not have a trading system, and also there is no trading risk management. If you do not have that, you will eventually lose all the money you have on your trading account, which is very bad. You need to protect your account, so the stop loss is mandatory. Take profit is also very good to have, so you do not need to watch this screen all the time when the price will reach this level or this level here, or even more down. If you have a take profit level, when the price reaches this level here, it will automatically close this order with this profit. Then you have making mistake, which is averaging, which means you are trying to open more trades to be on the average. So if the price go against you, you open new trade, and then you click sell. Then the price goes down, you open even more trades. So you are averaging your entry level. So when the price goes in one of the direction, if the price goes down, that will be great. But imagine if the price goes against you, all the trades that you currently have open, it will go against you. So it will increase the loss very quickly. But if the price goes in your favor, they will increase the profit, which is great. But if you do not have a proper trading system, this can eventually lead that several trades will completely wipe your trading account very quickly. Then there is overtrading with a small time frame. Well, the overtrading is very similar when you open more trades. Now, for example, if I go to 1 minute time frame, we'll take a look here. You can see that the price goes in my favor, so I open a new order. Well, that's great. I earned more money with more trades open. Then I wait for a few minutes to see how the price goes. If the price goes down, these two trades will make money. I'm currently in loss with this one, but I am hoping that the price will go even more down. Now, if my trading system tells me do not open more trades than one trade at the same time, this will be a broken rule. Now, if the price goes against me, like it is currently heading, let's see if the price will go up. It is go up, then I close all the trades because I have a fear that I will lose money and the price will go in the opposite direction. I open buy by the market. Now here it is. Now I hope the price will go up, and I'm waiting. So I have closed 3 trades with a loss, and I have opened 4th trade, currently buy order, where I'm expecting the price will go up because you can see the price is going up, and I will try to make money. So this is some kind of over trading. I have closed already 3 trades. I did not want to watch the price go up, so I have closed those and opened a 4th trade with a buy order, where I'm expecting the price will go up. So instead of having 1 trade open, I will try to open more trades, which will be buy order, because I would like to earn more money if the price goes in my direction. But before I open more trades, I would like to see the price go above the open price of this trade, just to be in profit. So let's take a look. It's coming very close. It will be some time it needs to pass, but the overtrading is when you open more trades at the same time, which is not very good, or open very quickly too much trade, for example, on the smaller time frame. You can see currently I'm on the smallest time frame, which is 1 minute time frame. That means if I open here the trade, you can see how the price changes every minute. It goes up and goes down, so I would like to open more trades very quickly to earn more money very quickly. But eventually this leads you to losing more and more money because you do not have the patience to watch and wait for the price to move in your direction. Now you can see how the price is trying to move up, so I hope the price will go up. You can hear what I'm currently saying all the time. I hope. This is not the way how to trade. You need to have a trading rules and trading system which will tell you when to enter the market, when to exit, and what will be the stop loss and the take profit. Now you can see how the price is going down. Well, that's very bad. I should open new order, which will be sell, because the market has turned around and it should move down. So I hope the price will go even more down. But remember, all the 4 trades I have open are with loss. This is the over trading. Eventually you will lose everything on your trading account because you are opening too much trade too quickly, and when you close them with loss because you're not patient, you're not disciplined, and eventually this is the bad and the mistake that many traders are doing. This is the over trading, and then you have 8 trading mistake, no trading journal. And that means if you have a trading system, you should journal your trades, because eventually you will need to make the statistics to see how your trading system is good. Are certain rules are good or not? The trading rules, entry levels, is there some kind of a patterns that you should follow that will increase the profitability? So if you have some kind of a pattern that you are following, for example, let's take a look here on this trade for a pin bar. The pin bar is a candle with a large wick with a small body. So in this case, if I trade a pin bar, which tells me this is the bullish pin bar, that means large wick on the bottom side, a small wick on the upper side with a small body. This is pointing that the price could go up, and in this case the price has gone up. So if I trade only these, so if I go in the past, I could also make some kind of analysis to see are they profitable or not. So for example, this is the one, and this one is also profitable. Let's take a look. Is there any other here except these? This is the one, it is profitable. Then let's move forward. This is the one. We can see the price has also gone up, but it has also gone down. This could be profitable. Then we have this one, which is not profitable. The price has gone up, But you can see how this can be analyzed, because when the price opened here at the resistance, this was open at the support, this one has opened the support. So what kind of conclusion can I make on this trading journal? When the pin bar shows here on the support, I have 2 trades profitable, and in this case, when the trade has formed here on the resistance, it was not profitable. So I could remove trading a pin bar, which is a bearish pin bar on the resistance, because on this symbol, on the gold on the 1 minute time frame, it is not respected and it's not very good. So what happens in this case? I remove the bad trades and leave only the good trades. This will increase the profitability. So it will also reduce the number of trades that I open, but I will also reduce the loss on the trades that I open, which are very bad. This is the trading journal. If you have journaled them, you will be able to make the analysis, go in the past and see what is good, what's not. What is good, improve that, increase those trades, but reduce the bad trades. Now, these are the mistakes I have covered here. You can see that is very important to have a proper education, that you know what is the trading, what is the tool that you are using, what are the basic terms in trading, so you understand when you open the trade. There is no way that you can trade without trading strategy, trading system. Then you need to have a proper risk management, which means you need to protect your account on each trade. Put stop loss, which should not be more than 1% of your trading account. Then pay attention with the broker you are trading. It should be regulated so you do not lose money with the scammers who exist on every market. Then you need to put a stop loss, which I have already explained. Then do not overtrade, which means do not open too much trade at the same time. You have seen how this leads to losing all the money on your trading account. Then have a trading journal so you can go in the past to see what is working and what is not working, so you can reduce the bad trades. This is all for this video lesson. I hope it was very useful. If you like this video, click the like button and subscribe. See you next time and happy trading.